S&P 500 and high-yield bonds make a new high. Record highs are only 8% away. We'll give an example of Joby Aviation and EOS Energy. Congratulations to subscribers. Gold is poised for a bounce, as is oil as well. Hello again, this is Alexander with MasterChartsTrading.com, and this is market recap for June 30th, 2023. As always, please don't forget the three very important things to do on YouTube is to like, share, and make a comment on this video. Let's get started. On this chart, as always, I'm using my proprietary MasterChartsTrading.com price action indicators. You can find out more about them by going to the link in the description, and you can sign up for them if you don't have them yet. Notice on this chart, we have just made a new 52-week high. This is S&P 500. So last week I was saying that we could be getting a pullback. We got a really shallow pullback, nothing to write home about, and we turned around and started moving higher. Today we gapped up and actually made a new 52-week high. So overall, this is a bullish behavior, very little pullback, and we're seeing continuation of presence of lots of buyers and very little sellers. This is obviously a good thing. I don't see a big problem with this chart. We can also look at a weekly time frame. So on this chart you can see my indicators, but just for a second I'll turn them off. The green, blue, yellow, the green, blue, red, and yellow lines. Just looking at this chart without any indicators. Next resistance, potential resistance, is March 2022 high. This is a weekly chart, by the way, meaning each candlestick is a whole week's worth of activity. So March 2022 high is right there. I guess that's next level of resistance. That is about 4% away. However, not that far off. Only about 8% away from today's prices is all-time highs. Record highs are very close, and that just shows me that, again, this is a bullish chart, bullish behavior, presence of buyers, buying pressure. Whatever way you want to say, there is no denying that stock market has indeed turned around. Back in October of last year, I can actually show you what was happening here. October of last year, I was already questioning this entire bearish narrative. If you listen to my videos, if you're a subscriber, I was I wasn't really sure about it at all, and I started thinking about buying. In fact, I can show you my position. Here's my position, QQQ. There is, because of the correlation between various stock indices, you can be buying S&P 500, you could be buying Dow Jones, you can be buying NASDAQ itself. There's not that much difference as far as shape of the curve. There is definitely a difference as far as performance is concerned. And NASDAQ tends to outperform S&P 500 usually. So I went ahead and I bought QQQ myself back here in January of this year. Obviously it's a very successful trade. I have taken profits. I've sold about 6 here in June, early June, and I actually went ahead and I sold another. I reduced my position to 1/2 of the original. So I have a half of my position that I bought back in January still open. Can we continue making highs? Absolutely. QQQ NASDAQ hasn't yet made a new high, but S&P 500 did make a new high. So, I mean, a pullback is, not out of the question, obviously, but will it happen now, or will it happen, another 4 or 5% higher, or maybe we'll first make a new record and then we'll pull back? It's difficult to say. Last week I thought we're going to start pulling back. Clearly that did not happen, and we actually made a new 52-week high. So for now I'm relatively optimistic, and I'm keeping my position open as well. Looking at high yield bonds, this is JNK. So why do I care about high yield bonds? This is JNK again. Down below here we have what's called a correlation coefficient. Is a correlation to the S&P 500. Notice that it pretty much is most of the time is positive. You can see that it spends most of its time in positive territory, occasionally it gets negative. Currently we have a correlation of 84%. So whatever high yield bonds are doing, junk debt is also doing. High yield bonds have not yet made a new 52-week high. This yellow line indicates a 52-week high. So we're approaching that area, and I think once we make it, by then most likely S&P will be already at, possibly will be already at records. But looking at the more granular, we can see that high yield bonds, GNK, they just made a fresh high for the move from the lows here in February. We haven't broken out above the February 2nd highs. There's a February 2nd high, but we're approaching that level. So, I mean, overall, I'm relatively satisfied with this chart. Ideally, we should be already significantly above previous highs. Ideally, we should be at 52-week highs, but, there's no such thing as ideal world. At this point, again, I am relatively optimistic, and I am thinking about buying, stocks in general. Here is actually a couple of trades that we did. I wanted to show my thinking. I wanted you to understand how I choose stocks. This is a stock called Joby Aviation. If somebody is familiar, make a comment. I know it's an interesting stock. People have traded this one in the past. It's a relatively new company. It's a startup that started back in 2020. And very recently, right there where I'm hovering, on December 22nd of last year, 2022, it made an all-time low. Well, it's an all-time low for the company. It was at $3.18. So notice the indicators on this chart. Let's say that back in May of 2022, we have started moving higher and broke above this blue support resistance line. So that means at that point, I would say, okay, we're now in an uptrend. I want to start buying it. So that means that I would need to put my stop somewhere, and I usually put my stop at the yellow line. So that distance from the blue to the yellow line at that point was 47%. I'm reading out of the chart. However, notice that at a certain point, the indicators started to get closer to one another. And that's where I started to become interested, is that around beginning of this year, 2023, the indicators really narrowed. And so let's say at the point of, let's say, January of last year, I would have said, okay, it would have moved higher above the blue line, and I would say, okay, yeah, let's go ahead and buy it here. We would need to put our stop somewhere. We'll need to put our stop at the yellow line. The distance between the blue and yellow line was only 32%. And back here it was almost 50%. So that means we have less risk. And so at this point, I was, until April of this year, I really wasn't following the stock too much. However, right there where I'm hovering on May 30th of this year, the stock broke out above this blue support resistance line, and this is all I really needed to know at this point to make a decision that yes, we have indeed broken out, and yes, indeed we should be buying it. So this is an actual alert that was sent to my subscribers on June 1st of this year, 2023. And at this point, I'll say, okay, we should be thinking about buying it. So actually, some people have sent to me, and they went ahead and they bought this one. And pretty quickly we got our target. Target is not that far off, like around the green line. That's our target. At this point, we need to move our stop to entry. I mean, it moved significantly higher, pulled back, and then the last 3 days, it just popped higher. I didn't know why until recently. I read the report. Apparently, there is some sort of a federal aviation Commission, I think that's what they're called, they have allowed certain aviation startups to work more openly, I guess. I don't know. There is less restrictions for aviation startups. And notice that this is a big move for this company. So if you bought, and I know some people have bought, they sent to me an actual where they bought it. So if they bought it back here in May, late May or early June, the Joby Aviation is now up 104%. It was around $5.50, now it's around $12. So big congratulations, and this is how I use my indicators. Again, I don't really notice that there is earnings reports, but I really don't really care about earnings. We just need to know what's the price of the security is doing. If the security is breaking above the blue line, that's really all I needed to know, and this is the reason why we went ahead and we bought at this point. And to find out more about these lines in the chart, please follow the link in the description. Another recent very successful trade that we did here is EOS Energy. At the point of me becoming interested about this chart, about this company, I knew nothing about this company, as always. It's a relatively new company. It's a startup also. What I liked about this particular chart is, as I just described for Joby Aviation, notice how wide apart the indicators were, a while back, and then notice how they got kind of narrowed together. They became very narrow, close together, and then finally, right there on April 10th of this year, we see a breakout above this blue support resistance line. So this at this point is really all we needed to know, that we're now in an uptrend. That's really all I really needed to know, that an uptrend for this particular security have begun. We got a relatively deep pullback, but we never got below the yellow line. Yellow line is our line in the sand where we say, okay, this is it. The security is no longer in an uptrend. Kind of bounced around a bit. Notice again, very interesting right there. There was resistance at the blue line. Several times we touched that level and then pulled back towards exactly the red line. So a couple of times touched that level and then finally broke out again. This is an actual alert sent on June 6, 2023 to my subscribers. And if you bought it, if you took this opportunity, this was a home run trade, especially if you bought options on this one. This was a very nice trade, good for 120% gain. If you bought it, the alert was sent at $2.58. It went as high as $5.67. It did pull back a little bit, but still overall it's in an uptrend, and most likely it will continue moving higher. This EOS Energy, I believe, is a battery startup. So yeah, it doesn't really matter what they do. The fact of the matter is this, based on technical parameters, that's really all you needed to know, and it's very convenient using my indicators to find good entry points on, especially on securities that are breaking out. This is a brand new breakout stack, and we were able to catch this move. So once again, congratulations to the subscribers. And let's switch gears now. Let's look. We're looking right now at DXY, Dollar Currency Index, on TradingView.com. This is the security DXY. You can't really trade it in the United States. You can trade UUP United States, but if you're going to analyze the security, if you're going to analyze the security, do not analyze UUP. Analyze DXY. So DXY dollar index made a low here in February 2nd, right there, kind of bounced and then went above this red line. This is actual short alerts to sell short here, and this was successful, obviously, and they pushed towards those February 2nd lows. We touched those lows right there on April 13, 14, and then rallied off of them. So right now, what I'm seeing is we made a lower low, but now we made a higher low right there in June 20th, 22nd. So right this instant, we are seeing a potential breakout of this security dollar index above this yellow support resistance line. So why do I care about dollar? Because we do trade gold. So let's briefly look at gold again. So gold so far is in an uptrend. Uptrend for gold began right there where I'm hovering on January 13th of this year, when it closed above this blue line. That's really all I needed to know. It pushed towards almost all-time highs right there, very close to all-time highs in May, and then pulled back. The reason why it pulled back is because dollar strengthened from May into early June. So from May into early June, dollar strengthened. Why does the dollar affect the movement of gold? Notice here, this is a currency pair. Gold divided by US dollar, XAU divided by USD. So if the lower part of this equation is getting bigger, dollar getting bigger, it will pull this currency pair down. So right now we have pulled back towards good support resistance level right around 1900. You can see it's indicated by my blue line. Right now I'm going to zoom in a little bit. So notice that we have touched this blue support resistance line. Right now we're trying to bottom there. So the big million-dollar question is, will the dollar continue higher? And right, today it's already Friday, so it's impossible to say, but overall I'm not certain that this movement for dollar up is done, and I think we might continue pushing, especially towards this red support resistance line. So from today's levels, if it pushes towards the red support resistance line, that's around another 3%. If this happens, I think dollar if dollar continues higher, then gold most likely will pull back. And so if it continues lower, if gold continues lower towards this red support resistance line, which is currently at $1,784, we're around 1900 right now. If we pull back towards this red support resistance line and break below it, close below that level, then I think gold will switch directions and continue lower. In other words, it will become now in a downtrend. And if something is in a downtrend, you want to be selling it. You want to be either shorting it or selling it, or just not owning it at all. So all eyes are really on the dollar. If dollar continues higher, then gold will come under pressure. So gold right now is trying to bottom here. Question is, will it hold? And let's wrap up today's video with a look at oil. This is CL1 exclamation point on TradingView.com. This is a TradingView.com interface, but let's look at oil on the weekly interface. So weekly just means each candlestick is a week's worth of activity. So notice this lows right there from 2021. So we have retested those lows, and I believe we retested them on 20th of March here, and then another time right there on the 1st of May. And so far those lows around $63, $64 have held. So currently oil is poised for a potential move higher. This is again my weekly chart, and looking at the weekly chart, notice this yellow support resistance line. It is approaching that line. It's trying to bounce, burst above that line. You can kind of look at it on the daily chart as well. There it is. It is currently at $71.65. So if we move above it, there is a good chance we will continue moving higher towards the red line at around $81. And notice I already put in this predicted path for the security back sometime in early May. So good chance for oil to move higher. What does that mean from fundamental perspective? Perhaps another oil shock of some sort. possibly. Hopefully nothing major. Doesn't involve nuclear weapons at the very least. But it does look like at the very least it's not dropping. So notice that there were multiple attempts to continue lower. So we had one, March, May, early June, mid-June, and now late June attempts to move lower beyond, below like $67, $68. And so far, all of them were rejected. So it is quite possible that we are done moving lower, and at least a bounce towards around low 80s might unfold. So right now we're watching gold pretty closely again. I'm sorry, not gold. We're watching oil pretty closely to see if the bounce will indeed unfold, and there is quite a good chance that this bounce will unfold, because I just don't see, what I'm seeing is support around once again $65, $66, $67 held on multiple occasions. So you can kind of see it on this chart. Just looking at the candlesticks, there's a big one right there. This is a weekly candlestick from May 1st, and multiple attempts on week of May 30th, week of June 12th, week of June 20th, and this last week of Monday, June 26th. Several attempts to go beyond them, and originally back here in March of this year also there was an attempt to go lower, and so far everything failed. So most likely the bears are not going to be successful, at least right now, to push below the $60-some mark. So let's watch for oil to move higher, possibly. Let's watch for gold to potentially hold support around 1900. We're again watching S&P 500, and I'm relatively optimistic right now about S&P 500. I think there is quite a decent chance that we will at least try to get to all-time highs. All right, if you like what you're hearing, please head over to MasterChartsTrading.com, click on sign up for one of the products. So once again, I have the indicators. You can see you can trade pretty much anything under the sun, but for example, we had a very successful trade for Joby Aviation using my indicators, and then another very successful trade using my indicators for EOS Energy Enterprises. So that's the indicators. You can get those trading indicators for TradingView.com. TradingView.com is this interface where I'm hovering, TradingView.com. You don't have to have a paid TradingView account. All you have to do is have a free TradingView account. Once you sign up on my site is called MasterChartsTrading.com. Once you sign up there, I will open the door for you on TradingView.com. It's pretty straightforward. Don't be scared. And again, I can explain everything. You can just contact me to get help. You can also make a comment. You can also send me a message through TradingView.com interface as well. I also send out daily alerts for the newsletter. So, for example, this EOS Energy and Joby Aviation was sent via email alerts that I send out on daily basis, and weekly basis I send out a members only video. So kind of like a recap for the week of what happened during the week, etc. I think the best deal, of course, is to get both indicators and newsletters, and that is at $59.95 per month. I think it's a very good deal, so consider signing up by going to the description of the video. Thank you for watching, and don't forget to hit the like button, subscribe to this channel, share this video, make a comment. Thank you for watching. Bye bye.